viewers, I am Sanjeev Pandya welcoming you to the Tax Talk right here on ITV Gold. This is the weekly show, brings you updates on the taxes that you need to file, whether it's a personal taxes or corporate taxes. You know, taxes can be very complicated, and especially for the year 2021, there have been so many credits, tax credits on the desk available for you, but you got to be able to find that right tax credit and take advantage of it, and perhaps take maximum refund at home. And for that, Sai CPA Services can certainly help you out. With their multiple locations in the state of New Jersey, over 30 years in the accounting practices, full-fledged accounting firm can assist you with small to large accounting matters. I'll give you all the details a little bit later on. But Mr. AJ Kumar, CPA and MBA with Science CPA Services, joins us every week and gives us all the latest updates and the guidance when it comes to taxes. Ajay ji, welcome to the show.
Oh, thank you, Sanjeev ji. Appreciate that.
Thank you. And as I mentioned, you know, there are so many credits available. There are so many things. I mean, you know, taxes have changed a lot in the year 2021. You may have to pay more taxes, but there are a lot of credits available for you also. And that's why you need to have right accountant, a person who knows taxes so well.
Absolutely.
And help you out. And who knows, you can, you know, multiply, quadruple your refund. And that's exactly what we look from you, Ajay Kumar. Virtual currency is getting popular because during pandemic, the surge in the cryptocurrency, what we call is virtual currency, has risen so much that, you know, all over the world, I think there is a strong demand of accepting this virtual currency in the form of a payment. Anything from buy grocery to all the way to buy a car or even to buy a property. This is really happening. Now, we need to know from you that how virtual currency is related with the taxes that we all file, you know, federal taxes.
Absolutely, Sanjeev ji. You are 100% right. In 2021 taxes that we are filing now, these taxes are very different than what we ever had. This year, there are a lot of credits, as you mentioned.
Yes.
There is a child tax credit, there is an economic credit, the $1,400 if you remember. Then there are a lot of limits have changed. But this episode is more about cryptocurrency, digital currency. Virtual currency is what we are going to talk about today. And as Sanjeev ji, you mentioned, in recent past, a lot of people have invested into virtual currency. Government knows that. So they made it mandatory. Reporting investment into virtual currency is a mandatory field on your tax return now. So you need to report it. You need to understand the taxability of this situation, this event when you are buying virtual currency, when you are selling virtual currency. In some countries, as you rightly mentioned,
yes,
you can even buy coffee. You can buy items, grocery, by paying in virtual currency. Is that a taxable event? You need to understand the taxability of the virtual currency so you can plan it right. And then you can invest like you invest in stocks. You can invest smartly in virtual currency.
Yep. Virtual currency is really, you know, becoming more and more popular. And there is a one myth that virtual currency is very expensive. That's not the case, because there are varieties of, you know, cryptocurrencies available, different names. And it's just like a stock market, that you buy stock and you buy virtual currency. How is virtual currency, you know, treated for federal income tax purposes?
Absolutely. Let's start there. So virtual currency, as you rightly said, is like any other stock. So the perception that the virtual currency is very expensive to buy comes from Bitcoin. Bitcoin is one of the virtual currency. There are a lot of virtual currency. It's more like saying stocks are very expensive to invest because you are only looking at Google or Apple. There are thousands of stocks that you can buy. Similarly, there are a lot of virtual currencies available in the market that you can invest in, that a lot of people are actually investing in. This episode is not about investing into virtual currency. This episode is more about the taxability of the situation. How does the federal government looks at it? How does the state government looks at the situation? What is taxable when it comes to virtual currency? What event triggers the taxes? What is non-taxable? For the purpose of this discussion, when it comes to the federal government, please assume virtual currency is like any other stock, any other investment that you are making in the market. If you are buying Microsoft shares, how would you treat it on your tax return? consider the same thing. When you are investing into virtual currency, consider as if you are not investing into currency, but you are investing into a stock. And that will make it easier for you to understand and apply the taxability when it comes to the federal government or the state governments.
Absolutely, very well said. Now, if, just like you said, virtual currency is like a stock, will I be recognizing gain or loss at the end of the year, whatever the investment that I made in a cryptocurrency? If there is a loss or gain, will I have to recognize on my tax return?
Well, two parts. So reporting that you have invested into virtual currency is a mandatory field. So there is a checkbox. Do you have investment into virtual currency? And you have to tick. You have to click on that checkbox if you have investment into virtual currency. As far as the taxability is concerned, you have to see if you are selling. So when you buy the stock, it's not a taxable transaction. You don't have to report how much stocks you have purchased. Similarly, when you are buying the virtual currency, the Bitcoin, the digital currency, you don't have to report how much currency you bought in. When you are selling it, and if you have a loss or gain, that's a taxable transaction. When you are selling the virtual currency, Sanjeevji,
correct,
that's when you have to report it on 8939 or Schedule D of your tax return, where you report your stocks typically. That's how you report the virtual currency from a taxable perspective.
Okay, so when you sell it, whether you made profit or loss, it has to be recognized on your tax return.
When you sell the virtual currency, it's a taxable transaction that will trigger an event that needs to be reported on your tax return. And if you are selling the virtual currency at a lower price than you purchased it for, then you have a loss, otherwise you have a gain.
Okay, interesting. That leads me to a next question, that how do I know that my loss or gain on that virtual currency is short-term goal, long-term goal, capital gain, capital loss?
Absolutely, great question. So whenever you have a question about the virtual currency, take a huge step back and ask yourself, how would I ask the same question when it comes to the stocks? So when you are selling the stock, the short-term gains means less than 1 year. And it's the same principle that applies to virtual currency. If you buy a virtual currency and end up selling it within 1 year, in less than 1 year, it triggers a short-term transaction. Either it's a gain, short-term gain, or it's a long-term gain if it's more than 1 year. If it's short-term gain, like any other stock, the tax rate is your regular income tax rate. So it could be, depending on your income tax bracket, it could be anywhere from 12% to 37%, your income tax rate. When it's long term, then you have to apply the long-term tax rate. The long-term tax rate currently are 0%, 15%, or 20%. Again, it depends on income level. If you are making, let's say, more than $459,000, married filing joint, then your tax rate is 20%, but that's the maximum. At a high level, from the budgeting perspective, you can assume my long-term tax rate is roughly half of my short-term tax rate, depending on when you're selling it. So if you have an opportunity to sell your virtual currency in 11 months, it may be better for you to wait for another month, so you can minimize the tax rate, half the tax rate. Maximum tax rate is 20%, maximum short-term tax rate is 37%. So it makes sense for, if you can, in your situation, it may make sense for you to wait for certain situations longer than 1 year than the shorter than 1 year.
Interesting. The way you explain all these things, I want to let viewers know that it's going to be very difficult for you to absorb all that information in such a short time. And that's why I always say to contact Science CPA Services for all your accounting and bookkeeping needs. And Mr. AJ Kumar or any of their CPAs at Science CPA Services will definitely help you out and guide you in the right direction. Because the way AJ Kumar mentions all the tax brackets and everything, it's like he's mentioning his favorite food dishes, one after another. This is what I like, this is what I like, this is what I like. Anyway, before we go to the break, I have a question that comes to my mind. I don't know. Maybe I heard or read somewhere there's been a speculation that there will be a different tax brackets for cryptocurrencies, because the way cryptocurrencies been ruling the cryptocurrency market itself, right? People are making money and everything, and government has been thinking that let's have a different tax brackets for the cryptocurrencies, mainly gain. Is it true, or could it be?
There are a lot of hypes, there are a lot of talks about it, but investing into stocks, and let's say you make 10%, but investing into oil and gas, you can make potentially a lot more. Investing into gold
Yes.
can result into different type of gains.
True.
So there is possible that government can come up with a different plan just for virtual currency only, but for the time being there is no such plan. At least for the 2021 taxes, you have to consider virtual currency as any other stock transaction. And as you rightly mentioned, there is only so much we can cover in this episode. It's a 30-minute show. If you have any question, please do not hesitate to write to us. We are here to help you. We will try our best to give you all the information that we can. But again, it's a limited time show. If you miss anything, please let us know and we'll be happy to help.
Absolutely. We always say that you can always contact us. taxtalk@itvgold.com. That's the email ID. You can mention all the details that you like. And then I think the most important thing to mention is whether you're in New Jersey, New York, or what state resident is. So it would help Mr. Ajay Kumar or anyone at Science CPA Services to guide you further. Now, you said that the cryptocurrency, virtual currency is same as the stocks. Do they go on the same schedule as the stock market details go on?
They go on the same schedule as a separate line item. You don't really combine them together.
Right.
So there is on 1040, there is a separate box that you have to select, which says, do you have investment into virtual currency? You say yes. Even if you have not sold anything, even if you're not paying any taxes, please understand, a lot of people feel investing into virtual currency will create tax liability. It's not true. It's not necessary. It's one of those things saying investing into stocks will create tax liability. If you make money through stocks, through virtual currency, then you pay taxes. If you're not making money, if you haven't sold anything, you don't pay any taxes. So on 1040, you say, yes, I have investment into virtual currency. On the same form, Schedule D, where the capital gain transaction goes, as a separate line item, you will report each virtual currency separately that you have sold, exchanged, or created some item out of it. Please understand, when we say selling the virtual currency is a taxable event, exchanging the virtual currency is also taxable. Take an example. You have Bitcoin, you have one type of virtual currency, and you are changing it to another type of virtual currency. It simply means you sold the first currency and bought the second currency. It's more like you have Apple share and you give up the Apple share to buy the Google share. It means you sold Apple share and purchased Google share. So the selling of the virtual currency, in exchange, the first currency was sold to buy the second currency. So the first currency sale becomes a taxable transaction. Similarly, if you are using virtual currency to buy some items, let's say you go out and buy a car, it means you sold the virtual currency for cash and used the cash to buy the car. So buying the items using the virtual currency, buying coffee, buying car, buying anything, triggers a sale event. So when we say virtual currency is a taxable transaction, it could be selling the virtual currency for cash, exchanging the virtual currency, selling it, buying another virtual currency, or selling the virtual currency to buy an item, meaning paying in terms of virtual currency to buy an item actually is triggering a sales event for the virtual currency. All these type of transactions create a taxable event, and you need to report these transactions on your Form 1040.
Okay, it's almost time to go on a break, but then I have one simple question.
Please.
Before we go on a break. Have you seen more of your clients with the virtual currencies in their tax return to be completed this year? Have you noticed that?
A lot of people have invested into virtual currency. Anybody who had any money to spare, especially the IT company guys, the computer guys, people who are technically savvy, the younger generation guys, a lot of them are invested into virtual currency. People who are not invested in virtual currency are sitting on the sideline, not knowing the tax impact of the virtual currency. They are playing safe.
Yeah.
And for those people, we have this episode. If you can make money, it doesn't matter if it's virtual currency, stocks, or land. If you can make money, go ahead, make money. Taxes are applicable only if you make money. Tax is a factor of income. We are talking about income tax over here. So do not hesitate. It's risky investment. We are not advocating into investing into virtual currency. The episode is more about letting you know the tax impact, tax implications of investing into virtual currency.
This is a show which is informative show. Basically, you give out information, and at the same time, you basically guide all of us when it comes to taxes, and that's what Tax Talk show is all about. We're going to take a short break. We'll be right back after these messages. Please stay with us. Welcome back to the second half of the Tax Talk show right here on ITV Gold. Once again, I'm Sanjeev Pandya, and I'm joined by Mr. AJ Kumar, CPA and MBA with Science CPA Services, a full-fledged accounting firm here in New Jersey with multiple locations. But wherever you are in the United States of America, you can definitely contact them, and through Zoom and through FaceTime, anything and everything is possible to guide you with your taxes in the right direction, to make sure that if you're eligible for certain refunds and why and how you should get that refund, because there are so many tax credits available. Today we are discussing virtual currency, cryptocurrency, whatever you can name that, and Bitcoin, as you must have heard Bitcoin. The IRS treats virtual currency as property, just like stocks. There is a minor difference between here and there, and that's why we're picking out Mr. AJ Kumar's brain to tell us exactly where the difference is and how we should be knowing about cryptocurrencies. First question comes to me is that cryptocurrencies exchange, let's say, for example, I'm just saying that I bought a Dogecoin and then I want to exchange it to Bitcoin when the prices go up, down, whatever it is. Does that exchange make any difference on the tax return?
I'm glad you asked. Absolutely. A lot of people know that selling the virtual currency is a taxable event. You sell it, if it's a gain, you pay the taxes on the gain. If it's a loss, you claim some benefit. What a lot of people don't understand, Sanjeevji, that exchanging the virtual currency is a taxable event. If you're exchanging from one virtual currency to another virtual currency, the way the government looks at it, that you sold the first currency, got the cash, and you invested this cash into the second virtual currency. So exchanging the virtual currency creates a taxable event that has to be reported. What you report is just the sale though.
Yeah.
You don't report in an exchange. There are two parts transaction. You are selling the first currency and buying the second currency. So purchasing the virtual currency is not a reportable event. You don't report when you are buying the virtual currency. You only report when you are selling the virtual currency. So in an exchange, the first event, selling to get cash, is a reportable transaction, and depending on how much you bought it for, if you have gain, you pay some taxes. If it's more than 1 year, as we discussed in our first segment, then it's a long-term capital gain.
Yes.
If it's less than 1 year, between the purchase date and the selling date, then you pay the regular income tax on it.
Absolutely. Now, it leads me to the next question. Since virtual currency is now globally becoming more acceptable, and I think in the future, in a very, very short future, we're going to see more virtual currencies accepted everywhere else. How does the local taxes, when I say local taxes, meaning state taxes, or if they have county taxes in somewhere, I'm just extending my question, that how does the local taxes would affect when you use virtual currency for your purchase, from grocery to auto to anything?
Absolutely. So you have to parse this question into two parts. Divide this question into two parts. First question is, when I have the virtual currency sale or exchange, how does the local tax works, including but not limited to the state, the municipality, any city taxes? How does that work? The second part of the question is, when I'm buying something using the virtual currency, there are some countries, you are 100% right, that are allowing buying the car, even coffee, by using the virtual currency.
Yes.
That's a taxable transaction right there. The way the government looks at it, if you take a huge step back, the way we explained the exchange example, selling the first currency, buying the second currency, in the similar fashion, when you're buying something, when you're buying a car using virtual currency, the way the government looks at it, you sold the virtual currency for cash and used the cash to buy the car. So the first part of the transaction, where you sold the virtual currency, it's a taxable transaction. So whenever you are using the virtual currency to buy any item, we have to see what's the value of those items that you purchased, how much was the cost basis for the virtual currency that you used to purchase those items, and any gain is a taxable transaction. Now coming back to the second part of the question, how does the local tax, the city, the municipality, the state tax, and virtual currency has been around for several years now. but still it's too new. Federal government is still trying to figure out, and this is the first year when the federal government made it mandatory to report the virtual currency on the tax return, that you have to state, do you have investment in the virtual currency, yes or no. It's a mandatory field now. So state and local governments are still trying to figure out, still trying to work through as if the taxability is there or not. For the time being, most states are considering the federal rule as the state rule. Most governments, municipalities, city, the state governments are taking the virtual currency transaction as any other capital transaction, any other stock transaction for the taxability part.
Absolutely.
So for New Jersey, New York, whatever taxes you would have paid for the stock transaction, stock gains, you will pay the similar taxes for the virtual currency gain.
Oh, wow. Really a lot of information to know when it comes
Absolutely.
to virtual currency. We're going to go into a very, very important subject to discuss.
Absolutely.
It's a very common term in the virtual currency. But before that, I have a question.
Please.
Since you're saying the government is trying to figure out how to tax this virtual currencies and everything. Now, this virtual currencies, cryptocurrency as we call, there are several of them. Bitcoin is the most popular, but there are several of them. Don't you think all these stores and wherever they accept cash and credit cards, they will have to come up with the additional a module in their software for the virtual currencies, a list of it. If somebody gives Dogecoin, if somebody gives Bitcoin, how much to take it out of it and what to give back in the return and stuff like this is going to be really, really interesting.
Absolutely. It will be a new software upgrade,
Yes.
huge upgrade as such. But it's no different than accepting the currency. I mean, there are 204 countries out there. So effectively, there are 204 type of currencies out there.
Right now. It could go high.
So it could go substantially higher.
Yes.
So if you go to Macy's and Walmart or all your stores, can you use Indian rupees to buy the stuff? Probably not. They will not accept it. They will not understand it. But can you use an Indian credit card? Yes. As long as it's allowed over there, as long as it has the international transactions over there, you can definitely use it. So where I'm going is buying items using any type of virtual currency may not be a near future thing. It will take some time before it goes there. But having the virtual currency implemented as part of the software where you can use your credit card or something similar to a virtual card or bit card or cryptocurrency card. I mean, this is not here yet.
That is the future.
That's the future. That's where we have to be thinking.
All right. Now let's talk about important stuff that I mentioned. There is a very, very popular word called fiat.
Yes.
In the world of cryptocurrency. How is that related, with the cash transaction or taxes? What exactly is fiat?
Well, the word fiat comes with a trust. When you talk about virtual currency, a lot of advisors will tell you don't invest into crypto. But fiat is okay. So fiat is a type of virtual currency that's blessed by a country. So as we said, there are a lot of countries in the world that have accepted virtual currency as the way to go forward. So a lot of countries have created their own virtual currency. So a virtual currency that's blessed, that's created by a country, that's accepted legal currency in a country is referred as fiat. The reason is more trustworthy, the reason people feel more comfortable, because it comes with the credibility of a country. Let's say if the US government says, we will accept this virtual currency officially, and this is our virtual currency. If the US Treasury start issuing the virtual currency, it will come up with a lot of credibility. A lot of countries would want it. A lot of people would want to invest it. Same thing with the US dollars. A lot of people feel comfortable with US dollar as opposed to any other currency in the world because it comes with the country's faith, country's trustworthiness. Similarly, fiat is a type of virtual currency that comes with a country's credibility around it. So it becomes more trustworthy than a typical virtual currency that you know.
Okay, interesting. Virtual currency, Bitcoin or anything, right? For charity or donation, is it usable? Can you use virtual currency for charity or donation? And how would that affect in the income tax?
Absolutely. So a lot of large charities, especially in the countries where the virtual currency is business as usual, where the virtual currency are accepted to buy stuff, in those countries especially, and a lot of international charities accept virtual currency now. Now, virtual currency, especially if it's appreciated, if you bought it for $1 and now it's $100, it's a great idea to donate virtual currency to a charity. Something similar to stocks. If your stocks have appreciated in the market, it's a great idea, instead of donating cash, you donate the stocks. And see, if you sell the stocks first or sell the virtual currency first, then you have to recognize the gain and then you donate the cash, as opposed to donating the cash. If you donate the virtual currency at an appreciated value, at a higher value, you get the benefit of the current market value, appreciated price, and you do not pay any taxes on the gain. Take an example. You bought something for $1, now its market value is $100. Instead of selling it and then paying tax on $99, you give this stock, this virtual currency, to the charity. Your deduction is still $100 because current market value at that time of donation is $100. But you do not have to pay tax on the appreciation. You do not have to pay tax on the gain. So if you have a virtual currency or an appreciated stock that you consider donating, if you have to donate anyway. So instead of donating cash, consider donating appreciated virtual currency. If your virtual currency or stock has gone down in value, then you do not want to donate. You want to sell it first, recognize the loss, and then donate the cash, as opposed to donating a depreciated or lower value stock or virtual currency.
This piece of information is very, very useful for individuals who really donate a lot. And if they have a cryptocurrency, they can certainly make a note of that information. With that note, I think, show comes to an end. I think you have covered most of it in about 25 minutes. But just like virtual currency, Science CPA Services also offers virtual consultation. That means you could be anywhere in the USA. Just reach out to them and they'll be with you on the phone or a Zoom call to help you out with your taxes. Do not just sit idle and say, okay, we're going to see, we're going to think, we're going to let it go. Don't do that. Find out exactly what's available for you, how to use that tax credit, what are the things to your benefits, and try to get maximum refunds. And most important thing, do your taxes right. And that's what Science CPA Services believes in. And Mr. AJ Kumar with Science CPA Services, with all these 20 plus years of experience, can really guide you in the right direction. AJ Kumar, thank you so very much.
My pleasure, Sanjeevji. Thank you.
And then when we meet again, same place, same time, we'll have another interesting topic for you to discuss right here in this Tax Talk Show. I am Sanjeev Pandya, wishing you all happy and tax-free days ahead.